I mean, we had a couple days where it was, 2% bounce in the markets. QQQ is up 4% right now. S&P is up 3.6%. So this is a real bounce here. Now, again, this is coming after 2 days of 5% sell-offs. So 5%, 5%, and then up 4%. It could just be a dead cat bounce, as they call it, where you've just had such harsh sell-offs that you do get one of these pop-ups. Is it a head fake? Mike says. I don't know. We're going to talk about it today. I told you guys on Thursday, and I almost wish we had an extra bonus class on Friday. Um, or not Friday, excuse me. On Thursday, was it Thursday? Yeah, it was Thursday. Where the markets were closing below my stop loss number on the S&P. I told you my S&P stop loss number. I was pulled up here. I told you I thought the markets were going to bounce from here, get a pullback and go higher. But I did say let's hold a tight stop here, 547.50 on the spine, and all bets off. If we go below that, close out of some positions, take some stop loss, and like this losing fun. No. Does anyone want to take a loser? No. But if you did, if you followed this game plan, I bet you're pretty happy right now as you stayed on the sideline for another 10% drop in the S&P. And a 10% drop in the S&P meant like a 20% drop for some of the stocks I like Carvana, GEV, and some of the others. So this is why we want to stick to this rule, even though I was wrong. I thought we were going to get a bounce. We want to stick to our rules and then find a better entry from there. Now, is today that better entry? I don't know. I did buy some when we had this big. Let me just pull up my charts here. When we had that big sell off on, so Thursday we had a 5% sell off, roughly speaking, 4 or 5%. If I can get this screen to adjust, it'd be great. Right here's Thursday. Friday we had another big one at the close. I rotated out of some of my S&P positions and moved it into more speculative stocks like Nvidia and GEV. Also did Nike, which is lagging right now. Where did Nike go? There it is. But I moved it into Nike with the tariff news. Meta was another one. So I did do that here, anticipating some sort of bounce. But again, I'm not 100% sold on this just yet. Why? Because we really haven't had any news. There hasn't been any good or negative news, really. I mean, there has been technically negative news with China wanting to start a trade war with us after the tariffs went into place. But that's about it. We're hearing that there's a lot of countries that want to negotiate, but nothing solidified, nothing set in stone just yet. So right now, I think this is a speculation bounce. People are hopeful that something's going to break through this week. And if it does, then we could see the markets really start to rally hard from here, and this would end up being a great buying opportunity. However, right now, if something bad happens, I think we're right back down here where we started. But we'll see. We'll see what happens. How is everyone feeling right now? Let me just ask in the chat here. Are you guys excited to hopefully start buying this dip if you had some capital or some dry powder on the side? Are you looking forward to increasing position sizing, or are you guys still feeling concerned that we may have another dip lower from here and this could just be a head fake today, and you want to just be patient? I'll give you guys a minute here in the chat. Dan is concerned. John sees another drop. Carmen says be patient. Bill's expecting a crash. David's up 1,300 this morning scalping. Nice job, David. Patient, unsure of the bottom. Head fake. Being patient, concerned. A lot of people. I think one person is cautiously optimistic. More pain on this way. Another drop coming. So the sentiment is still for a lower move from here. Now, here's a question for you guys. And I should learn how to do polls in here. Not 100% how to do that yet. Do you guys think we will have, for those of you who think we're going to go lower, do you think we're going to have a greater than 10% drop from here? Or do you think it'll be less than 10% and the bottom is nearly in? Just say greater or less than. Less than, greater, less, greater. 5% drop, less. So probably about 70% of you said less than 10%. And then about 30% said greater than 10% from here, which I tend to agree with the 70% crowd there, that I think that most of this dip, I think we might get another move lower depending on the news. It's all news driven. I don't have any inside scoops. I wish I did. I don't. So we'll have to wait and see what comes over the next few days. But I don't. I think if we don't get any good news soon, we're going to head about 5 to 10% lower from here. But I do think that will be the end of this drop. So I think that's overall, that's why I'm starting to get more speculative, or that's why I started to just leg into some speculative positions, buying them at these crazy dips right now after we had that huge flush out after the S&P went below my stop loss number. So let's go ahead and dive into today's class. I'm going to have to get off here about 10:45 as I do have another meeting to get to. But let's go ahead and dive in. Telegram of the week. Again, I just showed it to you. My stop loss on the S&P. Again, this telegram of the week was me taking a loser. So losers do happen, but it more importantly is sticking to a plan. Nobody likes to be wrong. Nobody likes to book a loss. We always say it's a joke like, well, it's not a loser until you sell it. No, no, that's not smart trading, guys. We want to stick to a plan. We want to hold that tight stop loss, especially in volatile markets like these. So that happened. This was the telegram of the week. It was me hitting my stop loss. But if you guys have been paying attention, you know that ended up being a good thing because the markets fell 10% after that. For today's morning update, and let me go ahead and update this again because this always happens to me. I post this in at the open and then it changes so much from there. Markets are even stronger than what you see there. So there you go. QQQ leading the way, S&P, and down at the bottom we have bonds down and gold up, but slightly up. I do think I'm going to cash in on my gold positions. I built up a pretty big one over the last few years just because of inflation and the whole interest rate situation. And that's done really, really well. I do think I'm going to start liquidating it now to move it into stocks because I just see more upside in stocks right now. I think gold can go another 10, 15% from here, but I think stocks can go 30, 40% from here, and I'll show you why. So I do think I'm going to start taking profits on my gold and move it into these stocks that are down so far, in my opinion, trading at such a good discount. As for news this week, obviously the big news is the tariff news. We want to hear anything we can about tariffs. Are countries making deals? Are they willing to negotiate with the U.S.? Um, what's going to happen with China? Are we going to have a breakthrough with China, or is this just going to escalate more and more? That's the big, big news. But in other big news, we still have inflation, guys. We still have our CPI data coming out on Thursday. That's the Fed's big number, CPI, Thursday morning before the market opens, and PPI on Friday before the market opens. This is going to have a lot of say on what the Fed will do with interest rates. Powell was very clear. He's not going to let this trade war deter his opinions on where the interest rate should be. His number one fear is still inflation, and he doesn't want to let that return just because we're having a little shakeout right now with this whole trade war escalating. So these are the numbers he's still looking at. Still very important. We have a question here from Jason. Still bullish on bonds and TLT. Long term, yes. We may have peaked out for the time being just because of the markets bouncing back today. But I think if we do get any sort of slowdown in the economy or CPI dropping, if CPI drops on Thursday, Jason, I bet you we're going to see bonds go crazy. So what we want to see for the bonds to continue moving is a potential for the Fed to cut interest rates, which is going to happen at some point. It's inevitable, but it's just how long are they going to hold it? Well, this is one of our key telltale signs. For next week, nothing crazy. Again, tariff news, tariff news, tariff news. That's all anyone cares about. We do have retail sales. We do have jobless claims. And then a short week because we have Good Friday next Friday, Easter. Excited to spend some time with family, go to church, all that good jazz. Love that time of year. It also means summer's coming up, which is my favorite time of year. So that'll be next week, 4-day trading week. Next week, we do have earnings also heating up as well, which I'll cover here in a moment. Now for the charts and data of the week. Here's a couple charts for you guys, bullish and bearish. This one was technically a bearish post. Basically says if there's no bulls, you can't have a bull market. So here we're looking at the bull to bear spread. And right now we dip below where more people are bearish than bullish for the first time since the bear market. So when we typically get these dips down lower, I personally think this is a lagging signal. I saw it on the internet, so I'll share it with people. But look, when we get these dips below this line, let's look what happened here. Short-term bottom, we rallied. Look, if that wasn't the bottom, we did have another leg down, then it dipped below the line again, but that was the bottom of the bear market. Notice here, this thing is almost kind of deceiving in my opinion. It says, oh, look, here's where it starts, but the sentiment was all the way up here. it didn't dip negative until right about here when the bear market was halfway over. So in my opinion, something similar could be here. We might not be at the bottom, but it could even be something like this. We get a pop and then one leg lower and we're at the bottom. Let's look back in 2020. Look, they highlighted it here, but the bullish sentiment or the sentiment was still bullish. It wasn't until literally the dip, the very bottom of the dip, that this flipped bearish. Same thing in the 2018 crash. So to me, this was posted on the internet to make people scared, make people think, "Oh my gosh, a bigger drop is coming." I think this is a contrarian signal. When more people turn bearish, typically that's a good time to be buying. That's just my opinion. Take it how you want. This is the average correction in the market. So correction is when stocks drop 10% plus. The average correction is this blue line here. So we get that 10% drop that happens pretty fast. And then a nice, slow, steady grind higher from there. That is the average one. If it does end up being a bear market, this is what it looks like. Obviously speaking, you wouldn't see it going up. And here's where we currently are, kind of mirroring a bear market right now. But again, this is still within the 90th percentile in the lower and higher range of what could happen. It's a very, very normal. So it feels really scary right now. It has been the fifth fastest drop in the stock market history. With that said, it's still within a typical range for a correction. So it's not fun. It's painful, but not all hope is lost. We're not totally hosed from here, in my opinion. This is the 16th 15% drawdown from all-time highs in the last 100 years. And let's look at how those played out in the future. So if you look at all these buy signals, every time the S&P dropped 15% or more, we can see how it played out in the future. Pretty much every time it's gone up, with a few exceptions where it's gone down. And if you look at this, it's over the 3-month, 6-month, and 12 months forward. Unless you're looking at the Great Depression. Not so good there. But short term doesn't mean it's going to be higher, right? -3%, -1%, and then +20%. But look at these bottom numbers. A lot of really good numbers here. 38%. That was 2008. Obviously not a good time. But other than that, more often than not, we're getting these positive readings over the next year. And here's another chart that goes hand in hand with that. This is what happens to the markets typically when we get a VIX or volatility index reading over 45. So that just happened. We just got the VIX to pop above 45. So let's take a look at what typically happens over the next 1 year in the market when we get that pop above 45. So if you buy the day it's at 45, on average, you're up 37% in the S&P 500 over the next year. We're not talking about buying Nvidia or Apple or I don't know, some GameStop. We're talking about the S&P 500 is up 37% on average if you buy the day that the VIX spiked to 45. That just happened on Monday. Let's see. Yep, Monday it went all the way to 60. I'll show you here. Here's the VIX. So Monday, here's our spike above 45, all the way to 60. This chart says if you buy that day, you average a 37% return over the next year, versus any other day of buying, you only average about 12%. Look at this. Over the next 5 years, look, this is why I'm really excited about this dip right now. It actually turns out to be a pretty historic buying opportunity where you can get about 2.5 times the return on your money than you can from any other year. So if you do have dry powder, this is a really good time for long-term investors, in my opinion. Let's go ahead and take a deep dive into the market overview. Again, I'm going to just cover this really quick. Last week, I said I think we're going to get a bounce from here. I thought the bottom was in, and we were going to go to 585, then settle down from there, and then go higher. I did put an asterisk here, and I said, however, we're going to hold a tight stop loss. If we get a close below 547.50 on the SPY, then ABO. That stands for all bets off. Take a stop loss, put some cash on the sideline. So what came next? Well, we ended up hitting that number, right? There was a stop loss, and I had to zoom out for this. Look how low it went from there. So there's a 10% drop. This was on Friday. And then we had that pop yesterday. Yesterday was a crazy market. Anyone see the open? Apparently someone leaked the news that that tariffs were coming off. And then there was no news. It was like a fake whisper that started on Wall Street. And that was one of the more volatile days I've ever seen at the open. It started down 5%. Then it ended up going like up 3% and then came back down and then ended up finishing positive on the day. However, it's not really the point. The point is, with that tight stop loss, we were able to save some pain there. So now Where do we go from here? Time to buy, time to sell, time to stay on the sidelines. Well, we're going to take a look at the normal market internals. First off, starting with the fear and greed index. This is the lowest I've ever seen it. It's at 4. I don't think it can go negative. 0 is the lowest it can go. So it's pretty much at the lowest it can go. Again, I don't think I've ever seen this reading this low. Typically in the extreme fear, we buy. With that said, it's been an extreme fear for a couple of weeks now. Every week we've done this session, and it's been multiple weeks where we've seen this extreme fear rating. On the put to call ratio last week, this was slightly above 1. And I said typically that's a good buying opportunity until we flush through our stop loss, take your losses there. And now look at our CPC reading, almost at 1.2. If you look back, that was what it popped to at the bottom of the August dip. If you guys remember the August market drop, I think the S&P and NASDAQ fell about 10%, give or take. And that was the bottom there. Similar reading to what we're seeing now. So really extreme reading on the put to call ratio. Now I see this as a discount opportunity. I do think that there is a chance that we could head lower, especially if we don't get good news. This is a catalyst driven market. It needs good news to go higher. Right now we're getting a pop, I think, on no news, but I think if we don't get good news soon, things could fizzle out. But with that said, regardless if the dip is or if the bottom is in, or if we're going to go one more lower, there are some really, really great stocks to be buying for a long-term mindset here going forward. I highlighted 4 of them that I really like right now. I did not highlight Apple just because of the China trade war. I don't think it's time to get messed in the middle of that. Right now, excuse me. Google is down almost 30% from the peaks. Amazon down 27% from the peaks. Meta down 31% from the peaks. And Nvidia is down almost 40% from the peaks. These are really good companies that, in my opinion, are bound to bounce back within the next year or two. They're not going to stay down forever. We're looking at the Mag 7s here, the most dominant stocks out there. Tesla even isn't a bad buy right now, in my opinion, down 50% off the highs. Now, the cool thing is it's down 40%, right? Let's say the Nvidia is down 40%, but that doesn't mean your profit potential is 40% because you're going to be entering at a lower price. So let's just do the math here. Let's say Nvidia was trading at 150, right? And it's lost 40%. So it's only trading at 60% of its value, right around 90. Right now, Nvidia's like 101, 105. Oh, wow. It's still going today. I love it. So the return to 150 isn't a 40% move. It's actually a 67% move. So that's why it's even sweeter than it looks right now. Nvidia's down 40% from the highs. If you buy now and Nvidia goes back to all-time highs, you make about 67% return on your stock investment. That's pretty good. I mean, that's like 5 years of S&P returns, right? So really, really good opportunity right now for the long-term investors who's willing to be patient, willing to wait, maybe willing to suffer a little bit more pain in the short term for a long-term opportunity. This is a pretty historic buying opportunity, in my opinion. Now let's look under the hood at market health. Right now, I zoomed way out here to show you the percentage of stocks above their 50-day moving average. Yesterday, we fell to 5% of stocks above their 50-day moving average. That means of 500 stocks in the S&P 500, only 25 of them were making fresh highs or trending higher. So 475 stocks were in a bear, or were heading lower. Shouldn't say bear market, but heading lower. The last time we had a reading below even 15 was the bottom of the 2022 bear market. The time before it was before we had that big summer pop in the bear market. So this is a very, very extreme reading when we're looking at the percentage of stocks above the 50-day moving average, which gives us an idea for how bullish or bearish short-term the market is. If we're looking at stocks above and below their 200-day moving average, this is basically stocks in a bullish trend or bearish trend. We just fell to 15% there. Only 15% of stocks are still in a bullish trend right now in the markets. That means, again, if we're going to do the numbers of 500 stocks in the S&P, that means 425 of them are in a bearish trend. That's a lot of stocks. Only 75 of them are holding strong. 75 of 500 stocks holding strong. Again, this is a very, very extreme reading. I zoomed way out here to show you just how extreme this reading is on the stock market. So that's us right now, right? 15% of stocks. Last time we had it, bottom of the 2022 bear market. The time before that, the bottom of the 2020 bear market. The time before that, the bottom of the 2018 crash. Everyone remember that crash going into December? That was the bottom when stocks dipped below 15%. How about that 2015 chop we had? That was the bottom. Same thing with the 2011 correction. That was the bottom. 2008, one of the greatest market crashes of all time. We had a bottom here, a little bounce, and then lower. But when stocks get below 15%, trading above the 200-day moving average, that means the bottom is either in or really, really close. So to me, this is a good reading for us. If we were up here and the markets were down that bad, that probably would not be so high conviction, I should say. It would probably mean that the Mag 7s were down terribly and the rest of the stock was okay. But because we're getting the broad stock market sell off where everybody's flushing out together, this is a very, very positive reading. Seasonally speaking, again, April is typically the best month of the year. I've got a feeling it's not going to be the best month of the year this year with how terrible it started. If we're looking at our presidential seasonality, we spiked out of our chart. So we'll have to have a new chart made. But if we're looking at how typically the stock market performs in the year of a new president, it's actually following pretty much in line with it, but far more extreme, right? We saw this extreme move to the upside at the beginning of the year with all the excitement, and then this extreme move to the downside, which a downside move is typical, but an extreme move to the downside this year, bounce in March, bam, big drop here in April to start the month. So going into April, I mean, it's very typical. It's funny how this matches up to have a little pullback, but this is an extreme one. Now, from there, the markets tend to trend higher. Again, we're going to need some good news for this to actually reverse course, in my opinion. But that said, I think the bottom is near. So, outlook, long-term investors, I think this is a gold mine right now. I think you have a sweet, sweet buying opportunity to load up on some of those stocks that you've been wanting to buy. For me, one of those was Nvidia. Another one is Meta. Google looks good. Amazon looks good. GEV was another one that I really like. As a matter of fact, I think I posted in here. I did. I'll show you in a second. I'll post it. I'll share with you the stocks that I bought. Now, outlook for short-term investors. So as traders, it's a coin flip. There's definitely short-term overextended to the downside. We should get a bounce from here, but it's very unpredictable because we need news to drive this market, and nobody knows the news. And if somebody here knows what news is coming up next, just let me know. I greatly appreciate it. But I don't know what news is coming up next. I'm just like you guys waiting for it to come out. So right now it's very unpredictable. It's not like we have smooth trending markets where we can easily read the waves. Here we're just waiting to hear what comes next. So I don't personally want to load up on bullish options right now if we're only catching a dead cat bounce, right? I don't want to go heavy on options yet until we have a confirmed trend in one direction or the other. Right now, it would just be a gamble or a coin flip to do that. But I do want to be buying stocks at these prices. Even if we get one move lower, I will be happy that I bought stocks. In 5 years, I have a good feeling I'm going to be very happy that I bought Nvidia at $90. I've been waiting for it to get down there for over a year now, and so now it's here. And I have no doubt, personally, this is my opinion. Of course, I can't guarantee this, but I am very, very strong convictions that Nvidia will be at 150 and higher over the next 5 years. So this is a really great buying opportunity. A lot of these stocks look really good. Again, Apple, I do love Apple, but right now they're in the middle of this China action, so I'm just going to hold off on them for now. So here's some moves I made on Friday. I took some profits on my insurance stocks. I think we all saw Progressive get downgraded. That was just so ugly. They were already so high up. Let's look at Progressive. It's bouncing back today. But so we had this incredible run. I mean, I just been adding to Progressive. Let me just hide Apex. I've been adding to Progressive since 2022. So way back in here. And look at this baby. She's been a monster. I mean, let's look at Nvidia in comparison, right? We saw Nvidia peak out. I mean, realistically peak out in November-ish. Go straight down from there. These insurance stocks have been just amazing. So I took some profits there and moved it into some speculative positions. Again, I still have insurance stocks, but I sold about 75% of my stake and I rotated into these more speculative assets. Again, these might take some short-term pain. We might get another drop from here where these stocks are going to drop another 10, 15%. But for the 1 year upside, I think we have a 50 to 80% realistic 1 year upside on these kind of stocks. It definitely within 2 years. In 5 year, I think it's much, much bigger. So that's why right now it's a rare opportunity to be buying the dip, but realistically buying these stocks at a price I never knew if we were going to see again. I mean, Nvidia, this is a weekly chart here, came all the way back to the price it was at over a year ago. So we're getting to go take a Back to the Future car cab with the DeLorean back to a year ago and get to buy Nvidia here. So that's again a very very awesome opportunity in my opinion. Same for Meta. Back to the January prices of 2024 before it had this huge rally. So again, we're getting in the DeLorean, headed back to the future, and getting to buy at these discounts. That's why I really like those stocks right now. Let's see what GEV actually, just for fun. So GEV came all the way back down to not quite as low, but October, September prices from last year. And I have no doubt that I shouldn't say no doubt. I'm very strongly opinionated that this will get back to all-time highs here within the next year or two. Wow, look at Carvana today. I did sell Carvana, but boy, holy moly, she's back. 17% today. That's definitely a speculative one. And the other one I bought too was Nike, mostly because of Bill Ackman is in on it. If a hedge fund's in on a massive hedge fund that's successful is in on it, um, that's they typically do pretty good due diligence. Also, this one's very very heavily volatile on the tariff news as well as interest rate news. I think if we get some good news here, this one will definitely refill this gap at the very least, and that's what I'm going to look to sell it. With that said, this company overall is in a downtrend. It's not one I'm going to hold forever. It's not even a company that I really love or anything, but I do think there's a short-term opportunity here to trade Nike to the upside. So I did add some of that in my shorter-term stock portfolio. I'll probably, if it fills that gap, I'll probably rotate it back into insurance stocks. Hopefully we get a little dip on those. For earnings, we're officially back into earnings season, which is crazy to think. Delta Airlines on Wednesday. We've got banks starting on Friday. So JP Morgan, which JP Morgan's rocketing today as well. Holy moly. JP Morgan's up 6% on the stock today. They have earnings on Friday, as well as BlackRock, Wells Fargo, Morgan Stanley. So we're officially back into earnings season with the banks kicking off. I can't believe it. I feel like we just finished it. There's never a shortage of news in these markets. Maybe eventually here we'll get some peace and quiet, but not right now. We got tariffs, we got inflation, and we got earnings. For the sector view, same thing. We're in April. Very typically bullish time to be invested in the sectors. Last week, these were the picks. XLE was at the top. It was the strongest seasonal. And then I liked financial, communications, and utilities. Those have been some of our bread and butter for the last few weeks on end. And the notable shifts, those are utilities, financials, communications, still the top dogs. However, energy took a big tumble in staples, obviously. When the market drops, consumer staples, like your cereals, Kroger, those stocks go up. So that was a big shift from this week, but I would guess that this is going to flip back quite a bit over the next week. But again, financials up big today. Let's see what XLC. Communications up big today. Utilities up 2% today. I wonder how tech looks on the sector. 4% on tech, which is the bottom feeder here. So again, I bet you next week we're going to come back and see these names still at the top. Staples, I'm guessing, will fall down from there. So again, with the top and bottom picks this week, I'm going to stay the course. I'm just going to drop out energy for now. A little too volatile right now. I'm going to stick back with utilities, financials, and communications, just like we've been doing week over week. Those are the sectors that I really like right now. And for the nitty gritty, we'll do some live trading here. Let's dive in. Apex signal of the week. Last week was O'Reilly. Now, this one did come back at a little bit of a dip from last week. So last week we were about here. Got a little dip. This is one that's going to be mostly, it mostly avoids the tariff news. I believe that auto parts are one of the things that will not get tariffs. So this is a very good look. I mean, look at this trend on the daily. Beautiful trend. We got this dip. We're at support. And Apex is signaling a buy signal. So if you guys took that trade last week, that's still viable. However, if you're going to do the weekly wrap order, just roll it over for this week's expiration. For the hot sheet pick of the week, I left T-Mobile in here, but I'm going to give you guys a new one. I left T-Mobile in here just because it is such a good, strong stock. It is a communication stock, which is one of the strongest sectors. It does have earnings coming up later this month. However, I think we're going to get a good opportunity this week to trade T-Mobile to the upside. Seasonally is a strong stock. It's gone up every year from March 31st through April 18th. So it's already taken this big dip. Good buying opportunity, in my opinion, to trade a higher going into earnings season. Now, let me go ahead and give you guys another hot sheet pick of the week, which I meant to update this yesterday, but apparently didn't get pasted in. And then I'll give you guys some options on it as well. Any questions so far while I pull this? Ooh. Alamos Gold. Ooh, I like this one. Let me see what the. All right, this will be a sneak peek one. I'll call it. Jim, good question. How about Palantir, PLTR? Another really good speculative one to rotate into if you want to look for some really crazy upside, but also some crazy volatility too. PLTR is up 9% today. So PLTR, Carvana, Nvidia, GEV, all speculative names that are going to rip and dip hard with this market. Paul, how about SoFi? That'll trade like the banks, but that's not one of the stronger banks. If it were me, Paul, I would be trading JP Morgan as my bank, my go-to bank stock. All right. Let me pull up this one. All right. New hot sheet pick of the week. Another financial stock. I like financials right now. MasterCard has been a really good one until we had all these tariffs come up. So I'm gonna go ahead and post a little MasterCard screenshot up here. It fell out of the sky just like everyone else over the last week, but it's bouncing back nicely. And starting on Friday, it is a seasonally strong stock. A little blurry image for you here. Yikes. But it's a seasonally strong stock. On Friday, 22-day hold time that holds through the end of the month, about 2.6% gain. Note they do have earnings on the very last day of the month this month, so I wouldn't trade through earnings. But what I might do is I might pull up MasterCard here, and I would personally trade a wrap order here with the 17th of April expiration. Everyone cool if I put that trade together for you guys? I'll also give you the call app option too, if you guys want to just trade it directionally. Where did that note go? Weird. All right. Carol's the only one that wants to trade, I guess. Anyone else want it on MasterCard? All right, there we go. Debbie Ed. Okay, now the chat's coming alive. I think I might have caught you all sleeping on this wild morning. You're probably watching the stock market, though. I don't blame you. This is a pretty crazy day today. Hopefully it sticks. All right, so we're trading MasterCard here. I'm going to buy for the, I'm going to give you the wrap order first. I'm going to buy, I'm actually going to probably go right out of the money. Man, they got these things priced in for a bounce. There's also not a ton. I might, let's see. Trying to see if we trade a sister company like Visa, if we're gonna get better options. Because they're gonna trade very similarly. They still have got it priced in so much. So these options, if you can see them, I'll pull them up again. Typically, if I were to wrap an at the money, or if I were to do an at the money wrap order, which means I would be buying the 325, selling the 327, I could pay about 125 and get entered and get filled. They've jacked these up. Let's see what it is to sell it. Look how poor those premiums are on both fronts. So basically, the market makers are pricing in a bounce from here. And that's why we're not getting these amazing prices right now. But let me go ahead and type this up for you. I'm going to do Visa because it's a sister company of MasterCard. They're going to trade very similarly, and the options prices are just a little bit better. So I'm going to buy the 17th of April, 327.50 call. Sean says no. I'm not sure what you don't want, Sean, unless you want MasterCard too. And I'm going to sell the 330 call. Now, I'm personally going to set this for a 130 debit at 130 limit. Scott, with the VIX so high, why not sell a wrap order? You could, but look, I mean, even if you're going to sell it, you should be getting about 125 premium here, and it's only 105. So yeah, I mean, even out of the money, 122. So selling premium makes sense. However, they've got it all. Um, Sean, you're funny. Um, they've got the prices all jacked up right now. So typically, if I were to do this, I should be paying about 125. Right now, it's 140. So I'm going to buy the 327, sell the 330 at a 130 limit. Jim, very wide spreads, but look, let's see if oh shoot. See if it fills. It filled right away at 130. So you can even try and drop a lower limit order here. I would take a look at MasterCard again, but I'm going to guess. I'll give you a MasterCard one too. I'm going to buy a 505, sell a 507.50, call, and I'm going to set it. Let me just see if I can get filled at 125. Uh, Green Farm Cat, can you see the chat? I posted the options criteria in the chat. So let me set this at 125. I'll let this sit on MasterCard. I posted 130 there. So you should be able to get filled at 130 on MasterCard. That's 135 now. 128. I set mine at 125 just to see if we'll get filled. But hey, there we go. We have two trades on the board there. If you wanted to trade MasterCard, so that's our seasonally strong stock, and you just wanted to trade basic call options, I think we're going to get a pretty quick rip here. So I'm going to go ahead and I'm going to say by the 16th of May, 25. I'm just going to say these are so expensive. That's why I like to do the wrap orders. I mean, it's $2,000, but hey, I'll give it to you guys anyways. 510 call. This is currently at $2,100 to trade versus our wrap orders are $130. So you can pay $2,000 for this call option if you want. I'm not. I'm going to do the spread here, the debit spread, which is much cheaper. And again, I only need the stock to get above 507.50 to make that awesome return. It's about what 85% return. So 507.50, right there where my crosshairs are. That's all I need MasterCard to do. Again, if we get a bounce higher from here, I think we can um, hit this target easy. iPhone, how do I know the options are expensive? In typical times, when I do a wrap order, which I haven't done a training on that in a while, maybe I'll do that this Thursday, which is just an at the money debit spread. So if I were to do that here, buying one strike lower, selling one strike higher than the current price, you should see that this price would be about half of the spread. So the spread here is 250, 505, and 5025. The difference is 250. So I should be paying about half that, 125 here. But right now it's not even close to half that. It's much higher. So that's how I know that the prices are more expensive than normal. You could also look at implied volatility, but I don't know what the typical implied volatility is for MasterCard. It could be 30%, it could be 20%, could be 40%. I just don't know. You could go look at the options chain if you want to, but just typically knowing options prices, you know that this is a little bit higher, a little bit more inflated than normal. How do I do both, buy and sell at the same time? So in Thinkorswim, I would click this ask side is to buy. See that little thing there? It says buy. And then I'm going to hold control on my keyboard and then come over here to the other side and click sell. That allows me to do both at the same time. You can also, let's see, come here. How do you set up? I don't know the other way to do. Oh, here we go. If you come down here to, no, that's not it. somewhere you should be able to select a vertical. Here we go. It's right here in Thinkorswim. If you go vertical, then you can also just shortcut it, and you can see the prices here. So you would just select the 505, 507.51, set your limit price, and then you can fire it off. Scott says right click. Oh yeah, you could do that. Buy vertical. That's cool. I normally just use the control key. Jackie, you can set an exit once it fills. You would just do it by closing, like by right clicking, saying close this position, set a good till canceled limit order to sell it. I don't do it. I just go for the full profit. But hey, in a market like this, there's nothing wrong with taking a profit when you can, because it's just so unpredictable what one day might bring. Dan, why would I buy MasterCard if it's up $17 today? More so on a percentage front, it's up 3%, but so is every stock in this market. So yeah, you could wait. You could sit on the sideline. You could wait till Friday. That's the technical entry day for this, right? April 11th is our technical buy date. I just wanted to get that trade out to you guys now. You don't have to take it if you don't like it. Pretty much every stock's going to be up today, though. Sorry, I got a lot of chats here. Sounds good, Sean. Uh, um, Tanya, do I set an exit strategy or let it expire? I like to let it expire. When would I use it at the out of the money as opposed to in the money? So right now, because the options prices are more inflated, market makers, everyone is kind of anticipating a bounce from here. That's why I had to go slightly out of the money. Also, like if you wanted to trade a stock like Nvidia right now, that's going to move more than 1% in a week, and you wanted to play a speculative bounce, you just get better bang for the buck out of the money. I mean, let's see what it is here. So like Nvidia, a 5% move from here pays about 200% on the options. So you get about a buck. You can sell for about $1, enter for 37 cents. It's about 200% return. Actually, that's probably what, 150? Between 150 and 200% return here by going out of the money. So you can just get bigger returns, especially right now. That's something you might want to go to since some markets are volatile and move more than normal. When we're getting those slow markets chugging higher and higher, like we usually get, that's where the wrap orders at the money are the best, in my opinion, because you don't need a big move to hit your target. Versus right now, big moves are the normal thing. So it might be better to go further out of the money. Kathy, I did a T-Mobile trade last week. It's down currently. We'll see if it bounces back still in that seasonal window. But I would just do that same sort of process with T-Mobile, Kathy, if you didn't take it last week. You're going to get a much better entry than us. Green Farm Cat, what do I think about the wrap trade on Nvidia from last week? Are you speaking to the Nvidia Elite, the bearish one we did? Elaine, why do I buy the April call spread but the May calls? Because with this spread, we're negating a lot of the time decay. I wanted to get to the expiration. The sooner it gets to expiration, the better it is for me. Versus when you're just buying calls straight up, you're going to be paying for the time premium. And the closer you're at expiration, the faster that money's going to be leaving your option and the more you're going to be forking over. So when I'm buying basic calls, I like to go 60 to 90 days out. But if I'm doing a spread, I like to keep it nice and short so we can get to that window quicker. Is now a good time to sell puts? And I don't sell naked puts. I know a lot of people do. It can be a good way to generate income. I don't like the risk to reward. I don't like the thought of a bad day or, bad news from China coming out and completely destroying my account. If that's your thing, though, I do, to answer that question in another way, I do think that this market is either bottomed out or pretty close to that bottom. We might get another 10% dip lower, but I do think that we're pretty much there. I don't know how much lower we can go. We did a 20% drop. Another 10% drop from here would be a pretty reasonable, pretty maxed out. That'd be about 32% from the peaks. So if that's your thing, Ed, sure. I know, Tess, I got to get off here. I'm going to be a minute late to my meeting. The bear spread, I just followed the momentum green farm cat on Nvidia. We ended up doing a pretty great gain on it on Nvidia's. I don't know. I can't remember the exact number. Let me give you an exact number. Where did you take it? We did 150% on last week's Nvidia puts. Kind of new to this. Is it buy open and sell to close? You would buy to open and sell to open, both. All right, I gotta jump off. I'm gonna get in trouble for being 2 minutes late to my meeting. With that said, if you guys enjoy the way we're trading, Deanna, do you have a link for the event coming up on Monday by chance that we can post in here? I do have a special presentation coming up on Monday at 1 with a old mentor of mine, a friend, Chuck Hughes. We've been working together on something pretty cool. It's an automated program that selects options for you. So it goes into the options market, looks at all the different options chains, look at the premium, liquidity, all that stuff, and it actually handpicks options for you to trade. So a lot of times, especially if you're newer to trading, it can be daunting to think, hey, I'm going to trade Nvidia this week. Now what options do I pick? Uh-oh. This is a pretty cool tool that we're just now going to be sharing with the world on Monday at 1, and it selects the options for you, does all the heavy lifting, does all the work. So it's a really great tool. I've never seen anything like it before. So that will be coming up on Monday. I'm hoping we get a link here to share with you guys. Deanna, do you have that link by chance? Well, I'll go ahead and post it in Telegram at least, so then you guys can sign up. I think that Chuck wanted to keep it to only 199 members to try it out for starters. But that we'll cover in detail this coming Monday at 1 p.m. Eastern. With that said, I do got to run. I appreciate you all for being on. I apologize for being able to do as much trading this week. Okay, there we go. Deanna posted it in the chat. Thank you, Deanna. Click that link. Sign up for it. It's going to be really cool. We're going to walk you through the tool and how it works, how it's able to select options for you, and hopefully it can get you some great results in this market right now. It is very cool. But I appreciate y'all for being here. I'm 4 minutes late to my meeting, so I got to run. We'll be back at it again on Thursday at 10 a.m. Eastern. I'll probably do a wrap order training, and then we'll do some live trading at the end of it too, and kind of cover where we're at in the markets from there. So again, click that link there in the chat and get signed up for that, the Auto Strike Option Summit. It's a tool unlike anything else. It'll be free. We'll go ahead and take a look at some stocks together. But I hope you guys all have a great week from here, and let's go markets. Come on. See you guys.